Okay, so welcome you all once again to today's section. Today we'll quickly look at the master budget. So the master budget comprises of the budgeted statement of profit or loss or the comprehensive income, and a budgeted statement of financial position, and then finally cash budget. Or a comprehensive master budget includes the functional budgets. So that's today's section. And the question that we are going to use will be question 2 from the handouts. So that is Chobo Limited. So question two, I will leave the theory section for you and I'll go straight to that of the Chobo Limited, the calculation. Great. So now let's see the question. Let's go straight with the requirement. Required. You are required to prepare A, the budgeted statement of comprehensive income per month. Per what? Month. In a columnar form for October, November, and December 2010. B. Budgeted statement of financial position in columnar form for each of the months of October, November, and what? December. C. Cash budget in columnar form for the month of October, November, and December. Great. Now, this question is very good for illustration. Aside that, we have about 5 master budget questions that you can clear them for me. And let's see. So let's go through the entire question. It says that Chobo Limited has just employed you as a management accountant. Don't tell the examiner that you are unemployed or you will not assume the responsibility. We've put it on you. Good. The following forecast information for the third quarter of the year 2010 has been provided to you. Sales, October, November, December. Everything you need is there. Expected price, 2020 to 2020. Good. Okay. Okay, so it starts like this. Sales units is 10,000 for October, 12,000 for November, 15,000 for December. Good. Expected price per unit. That one is 20 Ghana cedis for each of them, 20 Ghana cedis, 20 Ghana cedis. But that 20,000 cedis here is for closing stock. So closing stock is 20,000 for October, 15,000 for November, and 25,000 for December. Kindly make the necessary corrections or make sure that if you have the hard copy, you can join them. Now, percentage of gross profit on sales, 40%, 40%, that's the margin. Sales, that's debtors, 15,000. So debtors will be 15,000, 30,000, 15,000. Then creditors will be 25,000, 20,000, and 28,000. Good. So that is it. So taking it again, sales unit is there, right? Great. Sales units are there. That's 10,000, 12,000, and what? 15,000. Expected price per unit. So that's the selling price. They are there. Closing stock is also there. Percentage of gross profit on the sales. Okay, so let's go up on the sales. Great. So that is it. So 40%, 40% each. Debtors is there, creditors are also there. Now let's go to the next item. They are saying that balances shown above are at the end of each month. In addition, the desired balances projected for the end of September 2010 are shown below. Fixed assets 500,000. Depreciation, this is the accumulated depreciation 120,000. Stock is there. Cash balances expected is there. Unpaid tax at the end of the month is there. Then, that's this. Great. So unpaid tax is 3,000, debtors 25,000, creditors 30,000. We are done. Now the following information has also been provided for use. The expected company rent, the company rent part of it apartment at the monthly rental of 25,000 cities. And this is expected to remain the same over the next 2 years. So how do you treat this figure? So basically, the 25,000 will be part of what? Other income. Great. Then you add it to your receipts. So we are done. Now let's go to note 2. Selling and distribution expenses are expected to be 25% of each month's sales value. So we find 25% and then we treat it as what? Selling and distribution expense. We are done. Now note 3. Administrative and general expenses are expected to be 20,000 per month. So 20,000 per month, but this will go upwards according to the growth in the sales revenue. So if the sales increase by 10%, then the admin expenses must also increase by what? 10%. So let's go up and see whether sales has increased. Now the sales here, in fact, when we give you the units and selling price, in fact, we will also trouble you a little. So 10,000, from 10,000 to 12,000. So it has moved by 2,000. So 2,000 out of 10,000 times 100, that will give us 20%. So the sales has increased by 20%. That is it. So it tells you that their administrative expenses too will also increase by 20%. So September admin expenses 20,000. So increase it by 20%. That will give us 4,000. So therefore, October, the admin expense will be what? 40,000. That is from that of October to November. From October to November. October, we can make it 20,000 because we don't know September sales. September sales. Sales is not here. Great. So what we do is for October, the admin expense will still be 20,000, but for November, we increase it to 24,000. Then December, difference between 12,000 and 15,000, that's 3,000. All divided by 12,000 times 100. So that will give us 25%. So that means between November and December, the sales unit has increased by 25%. So admin 2 will increase by 25%. Then you are done. Great. Now note 4 stated that the fixed asset is depreciated at 2% per month. That's a great job. 2% per month on cost. So find 2% of the fixed asset of 500,000, then that's the depreciation charge for each month. Then you are done. Great. This is question number 2 from the handout. Good. Now let's continue the game. Note 5. The company has agreed to purchase additional fixed assets at a cost of 100,000 in November. So in November, we're going to buy additional assets in November. Great. So it will be part of the payments in the cash book, and you add it to your assets, and depreciation continues. Perfect. Then, note 6. The company plans to borrow 80,000 from a friend of the director in November, which is payable in a year's time without interest. So just a receipt. You add it to your receipts and you treat it as what? A liability, non-current liability in November. You are done. Note 7. The company pays tax. The company pays tax at 10% on net profit every month. This payment is actually done 1 month after the profits. 1 month. Let's take it again. This payment is actually done in a month after the month in which profit was declared. So in simple code, the tax we paid 1 month in arrears as MPV, right? So basically, that is it. Great. So let's start the game. So budgeted income statement. So Chobo Limited, right? The name of the company. Chobo Limited. Great. So what you do is right here. I'll do the budgeted profit and loss here. And do the cash budget there. So Chobo Limited. Agree. So Chobo Limited. A budgeted statement of comprehensive income. Income for the month of, start October, right? So October, November, and what? December. You are done. Great. So basically, that is it. Now let's see. So reporting currency. So Ghana city, and Ghana city. What do you do again? You start by your sales. So sales. So the sales unit for October was 10,000 according to the question. Sales unit is what? 10,000 units, and the selling price is 20 Ghana cedis. So therefore, sales revenue will be 200,000. When you go to November, the sales unit of 12,000, so 20,000, so 240,000 cedis. When you go to December, it's 15,000. So it's 15,000 units. So the selling price is 20. And that will give us 300,000 cedis. You are done. So that is it. Great. Okay. So now let's continue the game. Let's continue the game. Now let's calculate the cost of sales. Cost of sales. So here let's cost of sales. Cost of sales. Now with the cost of sales, we want three items. First, we want the open inventory. In fact, you can go and do the cost of sales calculation somewhere and bring it back. You can bring open inventory here or the open stock. Let's see how they call it in the question. But they call it closing stock, so they call it stock. The open stock will be that of October, will be for the closing for that of September, and that is 18,000. So that's the open stock. So open stock is 18,000. And then you bring purchases here. In fact, this one, I'll do it as a working somewhere for you to get it clearly. Good. You can also do it in here if it will not confuse you. I'll try and do it in. If it confuses, then we do it as workings. Purchases. Now, if in the master budget, it's happened that we include the gross profit, we will not give you the purchases. So to be a balancing figure, so take note, this guy is a balancing figure. It's a balancing figure because when we give you the gross profit margin, we are not going to give you the purchases. That's all. It's a balancing figure. However, I will give you the closing stock. So let's record the closing stocks. Now the closing stocks are here. 20,000 for October, 15,000 for November, and 25,000 for December. So 20, 15, 25. So 20,000, 15,000, and 25,000. Great, 25,000. We take it off. If it is closing inventory here, automatically it will be closing inventory at the end of October. It will become the beginning inventory for November. So it will be 20,000 here. It is closing for November. It becomes what? Open for December. That's 15,000. You put it here, you are done. Then you relax. When you analyze this, write here cost of sales. Cost of sales. Then the cost of sales, they have given it to us. Let's go to the question. If you think this approach will confuse you, you can do workings. So I'll perform one workings if I do it separately. Now let's go to the question. One of the notes stated that the gross profit margin is 40%. In fact, it was in the upper section. Percentage of the gross profit on sales is 40%. That means the gross profit is 40% of sales. So that means 60% of sales is what? The cost of sales. That's all. So when you put the cost of sales in bracket like this, you take it off from sales, you get the gross profit, which represents 40%. So in bracket 40% of all these figures. So 40% of this, that'll give us 80,000, right? 40% of this, that'll give us that answer. You are done. In fact, this style may confuse you, right? If it will, let's do something here. I'll only go straight forward. I'll do this as workings. Agreed. Yes, because there are two alternative styles. I wanted to do this and do the alternative, but the alternative is a bit okay. So going, gone. So less cost of sales. So cost of sales. Cost of sales into bracket workings number 1. So we are going to calculate the cost of sales. So workings 1. Workings 1. Let me bring it up small. Because I'll clean it again. So workings 1. We are calculating cost of sales. Okay. October, November, and December. Now the cost of sales is nothing but great. So Ghana city here. Now what you do is this. Start with the opening inventory. Go to the purchases. The open stock. And then let's close stock. In fact, without this working, you can still score everything here. But please, we need the purchases figure. Agreed. Please, we need the purchases figure. Good. Without these workings, you can still score the cost of sales. In bracket, the cost of sales represents 40% of the sales. Agreed. So 40% of each month's sales is the gross profit. Sorry, is the gross profit, not the cost of sales. The cost of sales is 60%. And then the gross profit is what? 40%. So let's make it a bit Simple, like this. So tell the examiner that, but let's take this section off. The gross profit is 40%. Cost of sales is what? 60%. That's all. When you do this, you can just take care of yourself from here. But still, you do the purchases figure. Yes, so definitely have to ensure working for the purchases figure. Agreed. You can go by this shortcut so that you'll be free. So you can just use calculator to find any of the figures. So gross profit, 40% of the sales. So 40% on this is 80,000. 40% on 240, that will give us, so 40% on 240,000. Good, so that's 96,000. And 40% on 300,000 is what? 120,000. So the question is this: what should I subtract from 200 so that I can get 80? Or I have to subtract 120,000. That's the cost of sales, which automatically the same as 60% of the sales, because gross profit is what? 40%, cost of sales was 60%. So any angle that you are coming from, the answer must be the same. Here too, take 96 from this to give you the cost of sales. So basically that is it. And now give us 144, right? That's the cost of sales, and you'll give us 180,000. That's the cost of sales. Now, when you come here, because you already know the cost of sales, this purchasing figure here is missing, and you have to look for it. It's a must. So let's do the working to look for it. So purchases. When I sum all this one up, I'll get the cost of sales, and that one is given to us. So we can use that one to derive the purchases figure. Open stock, we said that it was 18,000, and the closing stock we had 20,000 here, we had 15,000 here, and we have 25,000 here. All of them are coming from the question. We said that it is what? Closing for October, which becomes open for what? November. So 20,000. This closing for November, it becomes was open for December. So that's 15,000 here. Good. This one must be working so that do not disturb the actual solution. The cost of sales, you know it over here to be 120,000. So let's write here cost of sales of 120,000. For November is 144,000. And then 180,000. So the question is this. This one is a missing figure. Let's find it. It's a balancing figure. What should I add it to 18? So that when I take 20,000 from it, I'll get 120,000. That is it. Find it, you looking for it, and it's a balancing figure. So just subtract 20,000 from this. So that will give us 2,000 minus, right? Add it to this, so we get 122,000. So 122,000 plus 18 give us 140,000. Less 20 will still give us 120. Agreed. It's a balancing figure. So let's come here. If you take 15,000 off from 20,000, you get 5,000. So what should I add to 5,000 so that I can get 144,000? So I have to add 139. Agreed. Good. 139. Perfect. Great. Then finally, okay, let me take it again. how you arrive at the purchasing figure or the purchase figure, just a balancing figure. So what should you add to the answer for opening and closing so that you get what? That of the purchases. Here you can also use the functional budget approach to solve this question. You get the same answer. Great. So taking December for instance, let's use December. I have open inventory of 15,000, closing inventory of 25,000. Okay, so what should I add to the answer of these two so that I can get 180? That's all. If you take November for instance, I have 20,000 there. Closing inventory is what, 15,000. Okay, so what should I add to these two guys so that I can get 144,000? So what you do is this. What you do is this. Just find the difference between this and this. So 20,000 less 15,000 give us 5,000. So the question is, if the answer is 5,000, what should I add to 5,000 so that I can get 144,000? So that means I have to take it off. So I get 130 what? 139,000. Perfect. Please when, please, when you are done, kindly confirm your answer. Just take your calculator. 20,000 plus 139 less 15. If it doesn't give you this, that means this answer is wrong. Work on it again. Now let's come here. Here we have open inventory of what? 15,000. Great. Then we have a closing inventory of what? 25. So what should I add to this two so that we can get what? 180,000. So therefore, the difference over here is what? 10,000. So 10,000 negative. So when you add, what do you get? Great. So it will give us that became as what? 190. So you add back the 10,000 is negative. Add is positive. Take it off. So that is it. So these are the purchases figure. Great. Kindly take this section. I will take it off. Great. So basically, that is it. You can also copy this one and do it in. You can bring it in. If it do not confuse you, how we get it? Perfect. So that is it. Now, along with the other income. So in this question, do we have other income? So the other income, according to note 1, it says that the company rents part of its apartment at a monthly rental of 25,000. This is expected to remain the same for the next 2 years. So 25,000 each month. They've earned it. So you write here other income. That is the rent. We call it rent receivable or rental income. So let's call it rental income. I put 25,000 here. I put another 25,000 here. 25,000 here. Great. That is the rental income. Okay. Then you continue. First, we'll add this together. Then we call it what? We'll add this together. So putting it together, that so 105,000. That's the total income. So that will give us great. So that is the answers. Great. I'll take the first workings off so that we continue the game. Good. So let's see. Let's what? Let's the operating expenses. So operating expenses. So first operating expense on the list will be, let's go to the footnote. They are saying that selling and distribution expense are expected to be 25% of each month's sales. So let's take 25% of each month's sales. So 25% of 200,000 will give us for selling and distribution cost. So selling and distribution. Kindly find 25%. So that's 50,000, right? Good. So 50,000, you put it in brackets. Then here will be 60,000, you put it in brackets. And lastly, 75,000. That is how your question be. Okay, the next item is the administrative expenses, or the admin and general expenses, amounted to 20,000 per month, but this will go upwards according to the growth rate in sales revenue. In the sales revenue. Here, if you use the unit or the revenue, the answers will be the same. Why? Because the selling price is the same. Agreed. So now let's see. Let's confirm that. So just find the growth rates in the sales revenue and increase it. So let's see. Let's go to the board. Let me do something there. This is what we are saying. We are saying that sales admin expense is 20,000 for each of the months. Okay. So, and this one will increase, or the increment in the sales revenue will cause an increase in admin expense. So that's all. So it's just a matter of you finding the increase in the sales revenue. Good. So I'll write here admin expense, admin and general expense. For October, it will be 20,000 because that's the base. So right here, October, November, and December. So here's 20,000. Then that's the admin and general expenses, 20,000. What do? I just have to find the increment from here to here. So here, two ways. They say that the movement in the sales revenue, so find the increase in sales revenue. How do you find the increase in sales revenue? So it's the new minus old, all divided by the old. So if you want to get the November increase, so November increase will be the 240 less the 200, all divided by 200 times 100. That will give us a certain percent. That means you have to increase it by that amount to give us the same answer. So we have that's 40,000 divided by 200. That's 20%. Great. So times 100. So that's 20%. So that means November, it will increase by 20%. Let's do for December. December sales against November. So the movement, this and this. So still, it will be the 300,000 less the old sales of 240, all divided by the old sales of 240 times 100. So the increment is, that's 60 divided by 240. And honestly speaking, to give us 25%. Good. 25%. So 25%. That's all. That is one way to obtain these percentages. Another style to obtain the percentages, they are use the unit. Use the unit. Just that it might not be advisable. Why? Because the examiner sells sales revenue. In event where the selling prices are changing, you'll get it wrong if you use the unit because they say sales revenue, not unit. So here you have to use what? The revenue. Here it's coincidence that all the selling prices are the same. So all the selling prices are the same. If all the selling prices are the same, then if you use the unit, you get the same answer. So the movement in the units, so October to November by 12,000. So it has increased by 2,000. So 2,000 divided by 10,000 times 100, still 20%. If you check December, 15,000 from that of 12,000 November, it has also increased by what? 3,000. Good. And that must also give us 25%. Perfect. So basically, that is it. Okay. So we are done. So that means we have to increase this sales revenue by what? 20% and 25%. So increases. So that will be, so for November, I will have something like 1.2 times 20,000. So just multiply this one by 20%, then you add it. So that will be 4,000. Add back 24,000. Then what do? Then increase this one by 25%. So you find 25% of this and then you add it back. Good. So that one also will be 0.25 times 24. Good. And that will give us 30,000. So dot 25 dot 25 dot 25 times 24. Good. So that's 6 plus 24, making 30,000. That's the administrative and general expenses. So I hope you get it. Great. So basically, that is it. Basically, that is it. There you are done. Great. So can you take off this session? Then I'll clean. Good. So basically, that is it. Then you are done. And the next item we are going to look at for is the depreciation. So kindly watch carefully how we get a depreciation. Good. That's the next item. Depreciation. We said that depreciation is what? Depreciation, one of the notes. Note 4. Depreciation. So a fixed asset depreciated at 2% per month on costs. So 2% per month on cost. We have to just find 2% of what? The assets, the fixed asset value. So the fixed asset, the cost is what? 500,000. Great. So just have to find 2% of it for it. Don't forget that in November they bought assets. In November, they bought additional assets at the cost of 200,000. How do you treat that one too? Then you are done. Great. Great. So for November, that's for October, depreciation will be 2%. So it's bracketed 2% times what? 500,000, and that will give us 10,000. Great. Now when I go to November, for November, they bought additional assets. Let's go and look at the value of the additional assets, bought 100,000. So therefore, one of the notes, that's the note 5. So 100,000 November. So therefore, the total asset will be what? 600,000. So the depreciation over here will be 12,000. So that will be 2% on 600. So 2% times 600,000. That'll give us 12,000. The same apply for December. 12,000. Perfect. Then you are done. So December will be 12,000. And then November 2 will be 12,000. Great. So we are done with depreciation. So now let's continue the game. Let's continue the game. So the game is still nice. Okay. So basically, we are done for the first section. So what we do is we just have to find the profit before tax, because there's tax there. Anytime there's tax, we have to find profit before tax and get the what? Tax expense. So taking off from this, you get what you call profit before tax. Before tax. Then after that, income tax expense. Income tax expense. Then the net profit or antipart. That's profit after tax. We are done. So therefore, let's pick our calculator. Then start from the total income. That's 105,000. Less all the operating costs. This 80,000. That'll give us 25,000 as the profit before tax. So 25,000. Then that of good. So 25, 25, 28. Great. So 25,000 and 28,000. Now let's go and calculate our income tax expense. Now I'll read it and then you try them for me. They are saying that the company pays tax at 10% on net profit every month. This payment is actually done in the month after the month in which profit was declared. So for those of you who are doing finance, tell that tax is being paid 1 year in arrears, right? So tell me how you calculate the tax section for this particular question before I step in. So this suggests that, good, great. Now, here, in fact, you have to get this thing clear. Please, let's get this thing clear. This tax, when you incur it in October, to be paid in when? November. So does it mean that we have to bring October tax in November and November to in December in financial accounting? No. Why? Because transaction must be recorded as and when you incur them. So you incur that tax here. However, in the cash budget, in the cash budget, payment of tax, you lack it by what? 1 year, because to be paid 1 year. Sorry, lack it by 1 month over here, because to be paid a month after it has been incurred. So take note of that. When tax is being paid 1 month or 1 year in arrears, that one in the profit and loss statement, it will still be recorded in the same year. Agreed. Good. So therefore, 10% of this will give us 2,500. 10% of this will give us 2,500. 10% of this will give us 2,800. The same year, or the same month, or the same period. It must be recorded in the period that you incur them, not when you pay the amounts. Accrual concepts. So therefore, I'll give us 22,500. That's the profit after tax. That will give us 22,500 profit after tax. So I'll give us 25,200, and that's the profit after tax. We are done. So that is the end of the budgeted statement of profit or loss, or the income statement, or the comprehensive income. So that is the end of this. Take notes. This is a full version of master budget. Now let's continue the game. Let's continue the game. Great. Can we please, the income tax is 10% of the profit before tax, according to the question. Tax is 10% of the profit before tax. Great. Now let's continue with the game. Now they've asked us to prepare budgeted statement of financial position. I will leave that side empty. I'll leave that section empty. Good. And do the cash budget. Because if I don't know the balance for that of the cash, I may not be able to prepare the financial position. So I need the cash balance, or the cash budget balances, as the cash and cash equivalents. So I'll be able to prepare the financial position. So here I will leave it empty. So full page. Full page. So do the cash budget. Then alternatively, you can also do the statement of financial position, but leave the cash balance section empty. After the preparation of the cash budget, you put it there to balance nicely for you. So that is it. Now let's continue the game. So I'm doing the cash budget in economic form for the 3-month period. So let's see. Cash budget. Great. Cash budget. So let's take off the item. I will call for them, especially the admin, these two. I'll call for them. I'll call for the renter. So and again, that is all. Great. So let's continue the game. So I hope you can do the C. You come and do the B. Provided that you can arrange it well. Great. Okay. So C. Okay. Great. So C. Cash budget. So cash budget. So I put here October, November, finally December. We're done. What do you do again? Tell the examiner that you're reporting in cities. Cities, cities. Now cash budgets according to the video. Please, if I've not watched that, kindly do so. Great. Kindly do so if I've not done that. Summary of cash budget. You need only two items. One, receipts. All receipts one side versus all payment. That's all about cash budgets. All payment one side. In the receipts, we have only three items. Three. One, cash sales. If it's in the question, if it's not there, move on. Two, cash received from these credit customers. Three, I call it unique receipts. Other people call it other receipts. Example include loans, interest received, dividend received, in fact, anything received, rent income, good. So anything received, which is in the form of cash sales or the cash used from credit customers. That's all. Check the question if they are there, assemble them there. Please, the timing is very important, not the occurrence. If the time that you are going to receive the money, that is where you have to record it under the cash book. For cash book, you are using what? The cash basis. Wait. You go to payments. Payments are a bit many. There are about four. One, cash purchases, if only if it's in the question. Two, cash paid to suppliers. Three, expenses paid. Expenses paid. Then four, expenses, you know expenses, right? Wages and salary. Any other item. And here to unique, as usual. Unique, sorry, it's not coming. Unique is not coming. Unique or other payment. And then you are done. Good. So that's all. So this is what you need to prepare the. So in this question, do you have cash sales as part of the receipts? Do you have cash sales as part of the receipts? Other people also call it inflow. So either receipt or what? Inflow. So receipt or inflow. Any of them. Okay. So receipt or inflow. So I write here receipts. So receipts, line nicely. List them. If I go I can't find anyone, I'll leave it. Cash sales is not there. Then definitely what? Cash received from customers. So cash received. Great. Go and do your workings. Please, your workings, as I want to do it, I'll clean it. So let's go to workings number 2. We call it cash received from customers. October, November, and December. It's workings. I'll tell the examiner that the cash received, I'm going to use what you call debtors collection period or debtors schedule. So debtors schedule. Now, you know the receivable or debtors control account, right? The statement versus what I'm going to use here. So it's the same application. For those of you who are doing cash flow, you can do cash flow in here. 3 items. So 3 steps. to get anything paid or anything received, there are 3 steps, right? Get the opening balance of that item, the opening balance, get the movement of that item which will be sent to the P&L. So cash received or debtors, what will result there is sales. So that's the credit sales. So the sales less what? The closing inventory. Sorry, the closing balance of that item. You are done. So less closing balance. That's all. So let's go and bring the debtors balances. With the receivable or debtors balance, we had debtors 15,000, 30,000, and 15,000. That is it. So just that the 50,000 there is the closing balance for that of October. Agreed. So 15, 30, 15. So October closing balance 15,000 and 30,000 and then 15,000. Agreed. Good. You put it in brackets. So tell the examiner that if it's closing here, it will be open here, right? That becomes 15,000 open. Closing here becomes open here, 30,000. That will be the opening for October, which is the closing for what? September. So go to the question and pick the closing balance for September. September debtors figure is what? 25,000, as you can see here. Great. So let's go and then bring it in. So 25,000. So I write 25,000 here. What left is the sales figure? So let's list the sales figures in. Sales, we have 200,000. We have 240,000 coming from our first workings. Then we have 300,000. So this will give us the cash received. You are done. So 3 steps. Opening balance, add the sales to it, less closing balance. You are done. Anything received, anything paid. So therefore, this and this that will give us 10. Good. Add it, you get 210. So cash received is 210,000. This and this will give us 6,000. Good. Add it there, you get 241,000. Agreed. Then finally, 330 less 15 will give me something like 315,000. Good. This one is 250. In fact, the struggle here. Can you confirm the November? Confirm the November. So 15,000 plus 240,000 will give us 255,000. Less 30,000, 225,000 to 25,000. Good. So that is it. So I come here and tell the examiner that workings number 2. I had 210,000. I had 225,000. I had 315,000. Then I'll move on to the next receipt. So the next receipt will be the rent. That's the other. So the rent is what, 25,000, right? So rent or rental income of 25,000, 25,000, 25,000. Finally, they took or they received a loan of 80,000, and that loan too must be part of the receipt. Which note states that? That's the note 6, loan of 80,000. So include it here, loan, cash. Epic in November, right? So 80,000 in cash. You are done with the receipts. You put all of them together to get a total receipt. So total receipts. So this will give me 235,000. 235,000. So 250,000. Just align it once. Then 340,000. Great. You are done. What do you do again? Let's go to the payments. Payment to cash basis. This question, read a note, I didn't see any cash basis. Then the second one is cash paid to suppliers. So cash paid to suppliers. That will be note 3, the same note. So note 3, that is that this will be cash what? Paid. Just call it creditors schedule. Creditors schedule. Open balance the same. Here you don't add sales, you add what? Purchases. Add purchases to it. Let the closing balance of the creditors. So I'll take all this section off and go look for them. The format remains the same. It has not changed. So creditors balance at the start of the year will be, let's go to the question. So the open balance creditors, this 25, 20, 20, 28, that one is the closing balances. Then you are done. Closing balances. Then you are done. So the open balance for creditors will be 30,000 for that of October. So October, I put 30,000 as open balance. Then I'm going for the purchases. Can you record all the purchases? Good. Let's go in for the purchase figure. So let's recall all the purchase figure that we did in the workings number 1. So W1, workings 1. The purchase figure will be there. So let's list them down. So the purchase figure is 122,000. 139,190. Good. And let's go and bring the closing balances for the creditors. That one is in the upper section. So 25, 20, 28. So 25, 20, 28. Can we put the closing balance in brackets? It's closing here. It will be open next year or next period. That will be 25,000. Closing, now open here, 20,000. End it there. So this cash paid, you are done. Perfect. So therefore, take 25 off of 30, get 5. So 127,000. If you put them together, you add all. 25,000, take the 5. So 144,000. Wow. These figures, you've seen them before. What a coincidence. All the figures, you've seen them before. You take it off, you get negative 8,000. You take it off 182, right? Good. Who can tell me these figures? You've seen them before. It's come from somewhere. 127, 144. You've seen it before. Friends online, if you know, you've met these figures before. 127, 144, 182. Please, it's coincidence that they are repeating themselves here. So that's the cost of sales, right? Great. Great. Now let's continue. Finish the question soon. So cash paid. All right, your working number 3. So let me bring them in before I take them off. 127,000, 144,000, 182,000. Now I can take them off. Go in, gone. Okay. Then the next item to do, bring the expenses. So selling distribution costs, selling and distribution. We have 25% of the sales. So we have 50,000 here. We have 60,000 here. And we have 75,000 here. All these figures, work on them. Admin. Admin 2, we have 20,000 here. We have 24,000 here. And we have 30,000 here. So that's the expenses paid. No depreciation. No depreciation. No depreciation. Payment, expenses paid. No depreciation. Great. Then we bring the other items. Perfect. Okay. Now let's continue the game, man. We bring any payment. They're going to acquire assets, and so they're going to acquire assets, non-current assets, fixed assets. So right here, fixed assets. They're going to acquire it for 100,000 November. So dash 100. Dash. Then taxation. Taxation. That's the tax. If you are going to acquire additional fixed assets, the payment form part of the payment. Good. So the tax to be paid 1 month in arrears. So if it's 1 month in arrears, let's go and pick the income tax for that of September. So September tax will be paid in what? October. So September unpaid tax. That's 3,000. So that will be to pay in October 3,000. The October tax will be paid in when? November. October tax, you have 2,500. November tax, you have 2,500 to be paid in what? December. December will be paid in what? January. Yeah, then put all of this together, and that's the end of the cash budget. But before that, try and scan through the question and see if picking all the items that you're supposed to, all the footnotes. Admin 20, we've done that. First asset, we've done that. So yes, we've taken all. So what's the total? 130. Okay, so that's 200. Total payment, right? Down 204. 330,500. Good. So you get 289,500. So now let's get the surplus or deficits. Surplus or deficits. So surplus slash deficits. Good. So surplus slash deficits. So surplus slash what? Deficits. Okay. So let's see. Surplus or deficits. Great. Now let's continue the game. You get a surplus of 35,000. Hello. So 35,500 deficits. Great. Then you get something like, so 50,500. Good. Then you bring the opening balance. Opening balance before you get a closing balance. Sorry. Good. So let's go with the opening balance, which is same as what? The closing balance for last month. So you go and pick that of September cash balance. So September cash balance is what? Cash expected balance is 80,000. So 80,000. So I'll put 80,000 here. Put everything together. I'll get what? Kindly add them for me and let me have the answer. So 100 and what? 5,000. I agreed. That will be the closing balance. Double underline it. Then you are done. Push it here as open balance of 115,000. You are done. Put them together. It's 114,500. Double underline it. Push it to the next period or the next month as the opening balance. Add them together, then you get a balance of 65,000. So 165,000. You are done. Okay. I am interested in these balances, the closing balance and then the entire entry. Great. Kindly jot something down and then let's move on to the final aspect. That is the financial position. The financial position. So, statement of financial position. Let's see the requirements. Now, the statement of financial position too, we also need October, November, and December. October, November, and December. So let's see how best we can do that one too. Okay, so let's turn the ball. Okay, now let's see. First, tell the examiner that you are preparing the financial statement for Chobo Limited. So Chobo Limited. Let's go up small. Up. Okay, good. Let's go up a bit. Chobo Limited. Chobo Limited. Okay, Chobo Limited. Continue the game. Chobo Limited. Okay. So budgeted, please. Let the budgeted view. So budgeted statements of financial position as at October, that's 1st October, November, and December. Please don't forget your reporting currency. Great. You start with your fixed asset. Fixed assets. Your cost will be 500,000. 500,000. So here will be 600. They bought additional assets. Here will still be 6,000 or 600. Accumulated depreciation. Here, just be topping it up. Let's go to the question. The open balance of the accumulated depreciation happened to be 120,000. It was 120,000. Great. Good. The accumulated depreciation is 120,000. So you'll be adding the depreciation charge for the year to it. That's all. Accumulated depreciation open balance 120. Charge for October was 10,000. Good. So I'll get 130,000. So therefore, here must be 130,000. I'll take it off. I get a carrying amount. When I go to November, if I have 130 there, so November Charge for the year was 12,000. I'll add. I got 142,000. I come here, put the 142,000 here. When you are done, take it off. Come to December. I'll just add December depreciation. This is a 12. I get what? 152. So will be 152,000. You take it off. So therefore, it's going to give us 37,000, 370,000. Then you take off the depreciation November, that's 12. You get 358,000. You take another 12 from it, you get 346,000. Great. That's if you do the calculation. Okay, we are done. This is what we call net book value. Net book value. Great. Okay, now let's continue again. Current asset. Current asset. In fact, all the items that will go to financial position, is come across them. All the items. Current assets. Okay. Hello. Let's see. Good. So stock. What's the closing stock? So let's go and pick the closing stock. The closing stock happen to be the upper section. Closing stock is 2015-25. 2015-25. So 20,000, 15,000. But there's an error here. Yes, 4. That is 4. Good. That's it. Okay, so this figure must be. Okay. So great. So basically that is it. I think it's 154. So basically that is it. So basically that is it. This one is 25,000. Yeah. Let's see. So here was 25,000. For the stock is going up. So 20,000, 15,000, and 25,000. Great. You go to debtors. The same thing. So debtors 15, 30, 15. So 15, 30, 15. So you go to cash balance. So for cash balance, I have to pick the cash budget. So it was 122,000. And we had but it's not true. It was the gas work. Okay, so it's 115,000, then 114,500. So total asset will be. Okay, then let's go and do the equity section. Then we are done. So total asset will be 370 plus 20 plus 15 plus 115. So 520,000. Good. Okay, so 61,500. Then 65 651, right? Then come to equity section. Capital, the stated capital. Let's go and calculate the stated capital. Always, we might not give it to you. Just what you call the balance, the opening balance. No, asset is equal to capital plus liability. So asset is equal to capital plus liability. So each statement of affairs. So to get the opening balance or the opening capital, take all the opening balances of the assets, less the liability from. So asset less liability is equal to what? Capital. We are done. So here everything must be the opening balances, which is here. So let's start. All this item, all assets, less all liability. So let's see the assets. First, 500,000 less the 120,000. That will give us 380,000, and that's the fixed asset. So 380,000, good. 380,000 plus the 18, that's the inventory, plus cash balance of 80,000, yes. Then plus debtors of 25. So the total asset is 503, less the liability. So 30, less the 3 cities. So that's 470. That's the capital, 470. Perfect. So we show workings. So add all assets and take all the liabilities from. That's all. Now that I had something like 470. So capital will be 470,000. 470,000. 470,000. Perfect. 470,000. So that is it. Okay. Great. Okay, now let's work together. Let's work together first. So the fixed asset 500 less 120. Agreed. Good. So 380 plus 18 plus 80 plus 25 debtors. So that will give us 503. Now, let's the liabilities. First, the unpaid tax 3 less creditors 30,000. Whatever you get, that's the capital 470. Creditors are 30,000, debtors 25. We are done. Good. So bring the retained earnings. So retained earnings. Because it is the first time, or because there's no open balance for that figure, we just pick it straightforward. I wish I can see some part to. Wish I can see some part to. So retained earnings. So what's the net profit after tax for the first year? The net profit was 22,500. Good. You add. So that will give us 492,500. Perfect. When you come here, the retained earnings will be the 22,000 plus 22,000. That's the opening balance plus the profit made for October. What is the profit made for October? We had 22,500 plus the opening balance of 22,500. That will give us great. And this is how far the good Lord will bring us. After the retained earnings, you go to liabilities. Start with non-current liabilities. They pick some loan. Then after the loan, you go to your current liabilities, creditors, and don't forget the unpaid taxes. You are done, and it must balance nicely for you. So now let's see. So now let's continue the game. Okay, so to get the retained earnings for 2000 and not 2000 November, you add the profit made for November to it. And profit made for November, we had 22,500. And profit for October was the same. So though there's no open balance for the retained earnings was zero. The open balance was zero. So zero for the profit made for the year give us the 22,500. And then when you go to November, add profit made to November to that of what? To that of the open balance. That will give us the 45,000. So 45,000. And you put them together, then you get 515,000. Good. Then what do? You add December's profit to that of the 45,000. December's profit is 25,200. Now add 25,200 to the 45,000. Get a 70,200. Perfect. Put them together. What's the total answer? Then you are done. Good. You get something like so 5, 4, 7. Okay. Okay, so 540,200. So we are done for that of the equity. The levy, the liabilities, then we are done. The space here will not contain this. Okay, liabilities, I can add of them. Let me just do 3 liabilities, but the space here is too short. So let me clean the top section and do the liabilities over there. Okay, so basically that is it. Okay, so now let's continue the game. So I'll clear this section, but I'll still leave the total asset there. Okay, so let me keep this section off. So continuation. So right here, liabilities. So non-current liabilities. Non-current liabilities. So with the non-current liabilities, what do we have for non-current liabilities? So what do we have for the non-current liabilities? Great. Loan. The loan received. I think I'm going to pay it 2 years time, right? Good. Let's see, but that's 2 years. I think that's within a year. The loan 80,000 That's note note 6. So it will be payable a year's time. So within a year. So that's the current liabilities. That's the current liabilities. So in fact, don't want trouble, just call it liabilities, brother. Or current liabilities. So liabilities. So liabilities. Then it starts the loan. Okay, let's start with the creditors. I write October here. So October will be creditors. October will be 25,000. Then November 20,000, and then December 28,000. Then you add your loan. Cash 80,000, 80,000 because it has not been paid. Then tax. The income tax expense for that of October will be paid in that of November. So it was a liability here. So 2,500. Liability 2,500. And it was 2,800. Good. When you answer. So now let's put all together. The answer, we call it total equity and liabilities. So total equity and liabilities. Perfect. And that's the end of the game. Please when you're adding, add from here 492, 2,500 plus all this, and put the answer down. Great. Then we are done. Perfect. So let's put them together. So 492, 500. Great. Great. So 492, 2,500. When you add, so total equity and liability, here's 520, right? Good. So 617,500. Now the last one, let's see. For the December balance will be this figure, equity plus all the liabilities. Then you have 651,000. That is the end of the game. That's great. So that is it. Great. With the last year, we are adding from here. Equity of 540, 200 plus 28,000 plus 80,000 plus 2,800. Then it must give us this. So that's the last year balance. Great. So basically, that is the end of master budget. Great. This is ICA November 2011 question. So great. Okay, please. The master budget question, there are more. So aside the question 2, which is on November 2011, you can go to question 3. Let's see question 3. What is there? Question 3. No, question 3 is the cash budget. So question 4. Question 4 to good. Question 4 to is a cash budget. Question 5 to is a cash budget. Question 6 is a master budget. Kindly try that one for me. Question 6, master budget. Question 7, functional budget. Question 8, still functional budget. Question 9, master budget. Kindly try that one also for me. Question 10, buffer master budget. One of the videos contains this solution. It's also master budget, buffer limited. Great, you can try that one. This is November 2015. And then the previous one was November 2014. Great. The rest are yours. So this is how far the good Lord bring us. On that note, we are done. So thank you very much for coming. Great.